Kia ora! Welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of more signalled tariffs on imports into the US, especially on metals. A new inflation surge seems inevitable, as does less trade and low growth. In other words, we need to prepare for a new bout of stagflation. But first, American consumer inflation expectations for the year ahead remained at 3% for a third consecutive month in January, according to the New York Fed National Survey. This is far more sanguine than the University of Michigan survey we noted yesterday, which reported a 4.3% year-ahead level. The New York Fed survey noted that households now expect to pull back their spending in the year ahead. The Musk takeover of US spending priorities is leaving many losers, including US farmers. And in Canada, a survey by their central bank of about 30 significant financial market participants at the end of 2024 showed that those polled expect the Canadian 3% policy interest rate still has another 50 basis points of cuts to come. But that will level out at a 2.5% rate from mid-year for the next long period. This survey also showed an expectation of a 1.8 or 1.9% economic growth rate over the next 2 years, although the largest risk to that is from policy uncertainty in the US. And staying in Canada, falling residential values are leaving some very tough positions for buyers who bought off the plan and now find the contract price now far exceeds what a bank would value their purchase for a mortgage. In India, the 1-2 public policy push to go for growth with tax cuts and a lower policy interest rate isn't getting plaudits from financial markets. They have driven the Indian currency to a record low against the US dollars, although it has come off that a bit in the past few hours. In the face of new US tariff threats, some targeted metals prices have risen. Essentially, they're pricing in the higher prices American buyers will have to pay. Aluminium is at a 2-year high and running at long-term high levels. Steel comes in many varieties, but rebar steel hasn't moved much because of its China-focused demand. Other commodity metals are flat, but specialty metals prices are rising, and copper is back near its all-time high suddenly at just over $10,000 a tonne. These shifts higher will underpin global inflationary impulses that no one can avoid. And we should probably note that the new aggressive American Gaza policies probably mean there will be no end to the risks of using the Suez Canal, extending its inflationary impact. The US Treasury 10-year yield is now at 4.49% and down 1 basis point from this time yesterday. And the price of gold will start today at just under $2,900 and up $40 from yesterday. This will be a new record closing if it holds at this level. And oil prices are up $1.50 at just under $72.50 a barrel in the US, while the international Brent price is now at $76 a barrel and back to week-ago levels. And the Kiwi dollar is now at 56.5 US cents and down 10 basis points from yesterday. Against the Aussie, we're down 20 basis points at 90 Australian cents. Against the euro, we're unchanged at just under 54.8 euro cents. That all means our trade-weighted index starts today at just on 66.8 and down 10 basis points from yesterday at this time. And the Bitcoin price starts today at $97,281 and up at 0.7% from this time yesterday. Volatility of the past 24 hours has been modest at plus or minus 1.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.